Hello，大家好，我是丁鸟，欢迎来到我和 Aaron 的全球商业早知道专栏。那在过去几年，我们都经历了其实不少周期的这个起伏。我跟 Aaron 其实也是一直跟大家 follow 到现在，也有可能5-6年的时间了。那从疫情后的这个复苏，然后也有一些这个滞胀，然后有一些这个利率的这个变化，再到新一轮的这个 AI 的科技浪潮，其实很多人都在问我们现在在一个什么样的周期里面。那这一次呢，我们其实就邀请到了一位嘉宾，他的名字叫做拉斯特维德，他是一位这个丹麦的投资人，然后也是一位企业家和作家。他长期活跃在欧洲与全球创新的投资的这样的一个领域，他创办了多家的这个跨国的公司，然后以及投资的基金，然后包括他现在在做的就是 Nordic VC， 然后以及另外一个公司叫做 Supertrend。那他专注于前沿科技和未来趋势的这个研究，然后他写了有非常多本的畅销书，然后包括这个逃不开的经济周期。business cycle， 然后以及超级趋势、金融心理学，然后以及他最新出版的这本叫做《超智能与未来》。我和 Aaron 其实这个跟他聊了大概有1个多小时的时间，然后他对中国和美国以及欧洲的整体的市场，从这个宏观的角度来说吧，了解的非常的清楚吧。如果大家可能这个后面的英文听得有点困难的话，可以通过我们的这个总结先了解一点点，然后我们这期聊了什么。对，我不知道 Aaron， 反正我们聊完之后，你最大的感想是什么？
我最大的感想可能不止一点啊，而且我觉得都挺值得分享的。第一呢，就是他是一位相对比较乐观的投资人，他对中国的乐观是目前我在很多投资人里面见过的，我觉得90分位以上的这个水平。但是这还不是全部，其实他对美国的乐观也是我见过的投资人里面90分位以上，他对这2个经济体都很乐观。这个乐观他如果乍一听你可能觉得是不是盲目乐观，但其实并不是，是建立在他对经济周期、对这个所谓的 business cycle 很长时间的跟踪了解，最后才得出来了这么一个乐观的判断。当我听到他去聊他的一些这个研究是从100年以前开始做起，比如说在我们的对话里面他谈到了对这个英国经济周期、通胀周期的研究，这都是不止100年了，我当时粗略算了一下300年前，对吧？从这么一个周期开始来看，那么经过了对这些周期的对比之后呢，他自己认为当前的这个周期是处在一个，我给大家一个结论哈，可以详细的可以在音频里面去听，这个也是让我挺有启发的。他认为现在是处在一个创新非常繁荣这是一句正确的废话，我们都知道，但是是一个通胀在逐步下降的，是一个 deflation 的社会。这一点呢，跟我们很多时候的认知是不大一样的，因为我们去看美国，我们会觉得可能通胀压力很大，你看很多其他的地方，你也会认为通胀压力很大，比如日本，通胀也在逐步的起来。但是在他的这个 business cycle 商业周期的研究里面，他认为接下来的比较长的一段时间里面，因为 AI 科技的应用其实是一个类通缩的环境，那么在这种环境下面再叠加创新，会产生很多的金融泡沫，这个金融泡沫的数量在历史上会多于其他的这个经济周期，这也是为什么他相对比较乐观，因为他认为这个泡沫会一个接一个，一个接一个。第二个点呢，就是在于他聊到他的这个投资的时候，你会发现他对中国是非常乐观的，因为他个人投资25%以上都是放在中国。而且你要知道，全球大的这个资产配置模型里面，放到中国可能有的就是个位数，多一点的呢，小2位数10%以上就已经算比较超配中国的了。那对于他这样的一个做全球配置的投资人来讲，20%以上的资产都投到中国相关的公司里面，我觉得还是非常对中国很bullish，就是很牛中国的这么一个角色。
特别是他也讲到，他女儿这个从18岁开始就经常的飞来中国，现在女儿已经32岁吧。他说到，其实就是对中国他有这个很长时间的一个追踪和了解。
他可能本人并不是说每次都来中国的时间那么频繁，但是因为他家人在中国，他间接的对中国了解是比较多的。
对，而且我觉得他其实也是一直在追踪中国的各个指标，然后其实他讲到，他在前些年的时候，他看到中国的这个房地产其实占28%的这个 GDP 的，然后他就觉得这个怎么可能会是这样子，然后慢慢的他又观察到，其实我们下降到了12%，然后到底这个剩下的这16%去了哪儿？然后从他亲自来到中国，他才发现到原来我们全都是做了非常聪明的一件事情，是把这些东西全都放在了基础建设上面。然后不仅仅是可能我们看到的，比如说是这个什么飞机场啊，然后看到的这个什么地铁啊、高铁啊这些东西，那它可能更加多的我们做的比较好的就是我们把它投入到了这个新能源。然后因为在未来 AI 是一个特别前线的战场，那后面 AI 背后它其实就是一个我们怎么样能够有更多的电力去power 去供给这个 AI 的 data center。
对，电力、能源、资源。其实我 通常情况下我不是很在意一个人怎么说，我很在意是他怎么做，这也是为什么我会去聊他的投资组合在怎么投，他真的在投多少跟 AI 相关。那么最终你会发现呢，他是一个非常理性的投资人。他虽然认为知行合一，虽然他认为 AI 是一个非常大的长期趋势啊，这是个 super cycle，但是在这个背景下面，他对于我们去聊说 AI 到底占比有多高的投资里面呢，这个呢，虽然他没有详细的给出，但是呢，我从蛛丝马迹我能听出来，占比肯定不是最高的，但是不是最高，不代表他没有投 AI 相关，他还是投了很多跟 AI 建设更相关的领域，比如说我们前面聊到的能源、电力，还有在 AI 时代里面可能会更加稀缺的一些 commodity， 就是商品类的、金属类的东西，依旧可以认为是他把 AI 相关的整个产业链，他选了几个他认为投起来比较舒适的地方，我觉得这个是知行合一的一种体现。
是的，是的，虽然他这个说投 AI，但是他可能还是落到实处，他说是这个
还是投安全一点的
AI 公司还是有点太贵了，对，
有点太贵了，英伟达
对
5万亿市值不错，长期趋势不错，但是呢依旧还是有点小贵，所以你看人在讲自己的想法和最终你的行为中间，他肯定会有一些调整。
对对对，但其实它也是知行合一的，是在比如说它是看好的未来的电动车的市场，然后他发现其实电动车市场最终是需要电池的，电池需要什么呢？就是这些金属。那金属其实就很多这个分析师他都是没有看到整个的这个大的一个未来，所以在很多投资分析师里面，他是失去了这样的一个机会吧，在之前的投资当中。
最后再跟大家分享一个小小的他的行动我觉得这是里面比较有意思的一个故事，大家可以到节目里面去听详情。他在08年金融危机发生之前，他突然有了一个我们叫做直觉，他说他那天正在上飞机，刚刚上飞机，他就有这么一个直觉，他觉得不对。当然我相信这个直觉肯定是前面积攒了很长时间了，总觉得不对，然后在飞机起飞前他做空了市场，然后在飞机起飞后他又大幅做空的市场。我可以理解为前面是做了一些保护，后面是真的是在做空市场。最后呢，在08年金融危机这个波澜中，他其实是应该是不仅没受损，反而还受益所以我当时也问了一个小问题，作为收尾，我说这段时间你有没有类似的这个直觉出来了呀？现在市场这么火热，对吧？他说没有这个直觉我觉得这是个很有意思的故事，并不是说直觉本身是指导我们去行动，而是说建立这个直觉，你会发现是建立在他长期对商业周期和经济周期、投资周期的研究沉淀上，也不是说突然莫名其妙就出来的，所以很有意思的一个故事。但是呢，我们也要知道他这个直觉是怎么来的，不能盲信。好吧，就这么给大家先透点剧透吧。
对，其实这个故事让我想起来了，你在这个不止金钱里面说到过的这个情绪边界，然后你真的到了某一个节点的时候，作为投资人，你其实是有这样子的一个，好像也不能说是第六感，这有点太玄学了，但是你就会觉得好像不太对了，我可能承受不了更多的这个大的压力了。
其实是情绪到了临界点。
是的，但是我觉得他所有的这些第六感，可能还是基于他广泛的去阅读很多很多的这个投资方面，然后这个宏观经济方面的这个书籍。对，我觉得这个肯定是核心原因。
是的，也推荐大家去看一看他以前的那个 Business Cycle 这本书，我觉得非常经典。这确实是我们当时做投资入行的时候最早读的几本书。
对，然后可以也结合一下他最新的这本书，然后这本新的书叫做 Hyperintelligence， 中文名字叫做超智能与未来。对，然后大概全都是讲的对未来的一些科技趋势。这两本书其实是完全不同风格的，我觉得大家都可以找来看一看。好，那就请大家来听我们后面的这个英文的和他的对谈吧。It's very honored to have you on our show.
Well, it's a real pleasure.
When Citi first reached out to us, and then I talked to my co-host Aaron said, oh, I read about his previous book, Business Cycle. It would be great to have him on our show. And I was like, wow, this is awesome. So, Aaron, why don't you take the first question?
Yes, and it's my pleasure to actually have the chance to talk to you, Lars. And your book, The Business Cycle, is actually the very first book I read when I entered the career of investment. That is like a guidebook for me to start my career. What motivates you to study the economic cycle and write that book?
Well, I was quite young when I began to work on it, and what happened in my life was I was working in market research, so I have two educations, one as an engineer and one as an economist. But the economist education is Masters of Business Administration. It's not general economics. And then I was offered this job to become a dealer at an organization in Denmark that did extremely high-speed leverage trading. In the beginning, my boss would come to me and then he said, Lars, you need to buy $20 million or $100 million and sell this currency and buy bonds and this and that. And I just did what he said, but I thought it was really important that I could very, very quickly catch up and understand what was the whole thing about. So this is many years ago. So I started going to libraries and borrowing all the books that I could find about this. And then I came to the conclusion that the best way for me to really learn these things was to write some books about it. So I wrote a book called Psychology of Finance, and then I wrote this book, Business Cycles. So that in that way I would understand the psychology of what's going on, which I think is very important in some of the markets at least. And then I would also understand the economics behind it. And so the first thing I did was I went to libraries and I had read books about general economics before, but I read more. But I have this thing that when I try to learn something, I really like to learn it from the beginning. And then I decided to do it in a different way and understand the whole history of thinking in this field. And then I bought this book by Josef Schumpeter, the renowned Austrian economist. It's called The History of Economic Analysis. And I think, as far as I can remember, it's 1,280 pages long, the copy I have. and it's not Donald Duck. It's not very entertaining. But I read the entire thing, and then I took notes of all the different economists that had been contributing to the understanding on instability. Because when you trade in financial markets, it's really the instability you want to understand. And then I went and started reading books by Adam Smith and Henry Thornton and David Ricardo and so on. So going through all the very early classics. And I was imagining, as I read them, that I was them, that I only knew what they knew. And then I would read the next layer, and the next layer. So kind of going through the phases of discovery that all these people had been going through, and making that into a story. And it took me a long time. So I think there was probably a man-year's work put into this book, which is the longest.
I'm sorry, how many years?
One man year. So it was divided over a longer period of time. Because I had a day job, trading. But was, of course, it's very interesting when you study economics and are trading in financial markets and reading the geopolitical, financial, economic news, that everything you experience in your daily job, you check how does this relate to the theory I know. So it was a very efficient way of learning, I think. And I would recommend anybody who really wants to understand general economics to open a trading account. Maybe you only trade for a few RMBs, but it really sharpens your attention to try to understand what is going on right in front of you.
Okay, that's a very interesting story. And by the way, do you know that the Chinese translation of the name of your book is a little bit different from the original English name? The original English name is Business Cycle, right? But the Chinese translation is Inescapable Business Cycle.
Yes, and they are inescapable, and this is one of the points I make in the book. I have to say something about the book, though, also, and that is I had all these photocopies and sometimes also pages that I simply took pages out of books, wrote what category of theory they'd belong to. So I put them into these plastic folders, and I had my entire floor completely full of plastic folders with different things about different subjects. But then when I thought, now I really have everything I want to convey in terms of theory. I thought, how do I turn this into a story that people will actually read? And that meant I have to tell a story like, if you imagine you're sitting at a fire, at a campfire in the evening, and you're telling a story. How do you turn general economics into a living story with people and all the experiences and so on? And that took a long time because I have to find out, how can I find an anecdote that links this economist to that economist and so on. And that's why the very first thing that happens in the book is a murder, a duel. And so I just wanted to tell the story about general economics as if it was a crime story. And that was quite time consuming, but it was also super entertaining.
Other than your book, maybe you can share with us your book list. I interviewed one of China's most famous author, Dr. Wang Weigang. He said that he took 1.5 years off completely just reading different kind of economic books. And pretty much like you, and he's like write a whole giant like a map, how this theory related to that one, how this work with this one. It's like a very interesting, like this is really take a long time for people to understand, even for the brightest minds.
Yeah, exactly. This is exactly what I did. And then it would have been easier today because everything is online. But in that time, many of the old classic books, I had to go to the Royal Library in Copenhagen. And then you had to order the book. And then the next day they would have it for you, but you are not allowed to take it home. So I would sit there in these really, really old halls reading these very old books and trying to take notes. What do they mean and how do they connect to each other? But I think in general that is super interesting to find out what is the story in a lot of data. That's why I like to write books. It just stimulates me and inspires me a lot. And I can... Sometimes, for instance, when I wrote this book, maybe I would be sitting with my day job, looking at live prices on the financial markets, and suddenly it would come into my mind. I can tell the story about the crash in 1929 by combining this with that, and then so it's like going in the back of my mind all the time was on slow burn. Was going, how do I tell this story?
From your introduction, you said that you've been through 6 different cycles, and then you basically never lost any money. So can you tell us a little bit about that? That's just such amazing track of record as an investor.
Well, I have lost a lot of money. So if I have no idea what the sum of all my gains and all my losses are, except that I know my gains are bigger than the losses. But I've never been in trouble. So some of the cycles I have predicted extremely well and made money on the way down, some less well. The one in 2008 was literally in the last minute. So I was somewhat nervous about the markets. And I can remember I was standing in Zurich airport and I was boarding a plane to Berlin where we had some property projects. And then when I'm lining up to go on board the plane, I just think, I don't like this. And then I called my, this was UBS. So I called UBS and said, please hedge all my positions. Hedge or sell, whatever you can do fastest. And then they did that. And then just when I was inside the plane, I called and say, and go short. And then took some short futures so that I could make money on it going down. So it's very much... at least when I trade, it's very much intuition. At the end of the day, it's just a feeling you have, but the feeling needs to be based on a lot of information. And then it's like similar to what I said about writing the book, is that this process of digesting data and coming to conclusions is going on all the time in the background, in the mind. I know other people who are not using intuition as much or not at all, just having some very fixed models based on data. And perhaps that's most algorithmic trading, you would say, is not intuitive, it's completely fixed data driven. But I like it to work on intuition.
Just out of curiosity, where does that intuition come from? Does that come from your understanding of the business cycle or something else in your life?
It can be many different things. So the understanding of the business cycles is very important, but business cycles are slow-moving things.
Yes, absolutely.
Yeah, so you can say, how do I make such a big change of mind between lining up in a queue for an airplane and before it takes off.
Exactly.
So that is also about trying to feel what I think other people are about to feel or beginning to feel, which in this case was fear, and I do use technical analysis, looking at charts and looking for big turning point patterns and breakouts and so on. But I don't use it for everything because I think for some markets it's not very relevant. For other markets it's relevant. The changes I've seen during the more than 30 years that I've been investing very actively, the main change that I have seen in the markets is that technology innovation has become more and more important. And for instance, we experienced when DeepSeek came out, the announcement of the DeepSeek model, beginning of last year, where it was such a shock for financial markets in the US. Nvidia tanked for a while, Nasdaq was impacted and so on. Was not last year, by the way, it was this year. So I think it's very, very important to have a good grip now on technology in order to understand what is likely to happen. And then there are periods where geopolitics is completely irrelevant. I think very, very often people overestimate the importance of geopolitics, and very often I have a part of my trading strategy is to ignore geopolitics. And so when people are...
That's really interesting.
Yeah.
We should definitely talk about this point later.
Yeah, we can get into that.
I thought now everything is about geopolitics.
Yeah. So, but I said there have been periods. So I think after Donald Trump became president in the second period here, geopolitics has been incredibly important. And what I have focused on so much this year, which has been very, very good. So I have a hedge fund, which has a fantastic year so far. Was to understand the administration, so the team around Donald Trump, because you can become very confused if you only listen to Donald Trump, because
absolutely.
So what he says is tactical, and he can say Monday morning that he likes some other state leader, and then Wednesday he says he doesn't like him, and he says whatever he thinks can get him to his goals. So what I have been doing, and so we have a team, so what we do very much is we listen to the people who in the US who actually are responsible for the different resorts. So Scott Bessent is Secretary of Finance. He gives lots and lots of interviews. He speaks the truth, in my opinion. He says exactly what he wants to achieve. He lays out a 4-year plan. Now it's 3.5 years, but he explains in a lot of detail where they're going, why they're doing it. I like Howard Ludwig, who also explains everything. So it was very important to have a complete picture of what is this team actually trying to achieve. And then whenever people get really scared about something Donald Trump does, just understand that he's just doing that to get this plan executed. And for instance, when they came out on April 2nd on so-called Liberation Day with this horrific price list of tariffs, we knew that this was not what he was aiming for. This was a provocation. He always starts a negotiation by slapping his counterpart in the face, pulling his gun and then say, let's talk. And so this was just the same. And the markets completely panicked. And we just bought more because we thought that we had listened to Ludwig and Bessent, and they had said that they expected to get $300 to $600 billion a year in tariffs. And so if you looked at that, that sounded like something like 15% tariffs on all US imports. So much, much less than this price list he came out with. So we just assumed that we would end around 15% on average effective tariffs, and we're pretty close to that now. And then lots of people were panicking about this would create a lot of inflation in the US. But then we looked at, so has it in previous episodes during the last 100 years, where the US have increased tariffs. Has that given an inflation problem? No. Actually, in each case, it has given declining inflation. And we also looked at just the numbers. So the import in the US is 14% of GDP. If you have 15% on 14%, you are down to like a couple of percent. But then we also looked at normally when you introduce tariffs, how much is paid by the consumer, how much is absorbed by the importer, and how much is absorbed by the exporter in other countries. So our view was that you would have a short temporary increase in inflation, not much, but that the overall picture for the American economy and indeed for the world economy is declining inflation. So this would go much better from the point of view of the American economy than people thought. So I think it's very important to have a long-term view, also in this case, look back 100 years and check what normally happens when you do these kinds of things. So I have always found it extremely useful to look at super long-term graphs of what has been happening in different markets. And for a long time, Credit Suisse had this fantastic chief strategist called Jonathan Wilmuth, and he would come up in the ski resort in Verbier every winter, and then for selected clients he would present his view on the current economy, but based on 100-year graphs. And of course,
that's a really long period of time.
Yeah. And he used the 100-year graph to show that, in the perspective of how the economy generally works, how do you understand what's going on right now? And then he would find patterns in this that people would not find if they were not looking long term. And I remember one of the many ones that he presented once. It was about the likelihood of financial bubbles. So he had taken the British economy, because you have really good data from the British economy going all the way back to the beginning of the Industrial Revolution in Scotland. So that began around 1775. And then he was looking at what has inflation been. In the early days, there were no good statistics for inflation, but you did have something that's quite unique. You had a bond called consols. So the consols never expire. I would love to issue such bonds. The consols just run perpetually. So, but the interest on them, the interest rate on them changed because their price changed. So he took the time series of consols as a proxy for the inflation in the UK. And then we have very good data for how much innovation there has been. That's something our company Supertrends maps in a lot of detail. And then he showed that from around 1800 to 1900, first of all, from 1700 to 1800, you had quite high inflation, but you have quite low innovation. So you had 8 financial bubbles in that period. But then if you go from 1800 to 1900, you had low inflation and high innovation. This is what we call a Goldilocks period. And then you had, and that's where investors are happy most of the time. You had 21 bubbles in that period, in those 100 years. Then from 1900 to 1980, you had very high inflation, growing inflation. You also have high innovation, but you had high inflation. Then you had only 5 bubbles in 80 years. And then from 1980 until now, just interrupted by the COVID episode, but apart from that, from 1980 until now, you have had a deflationary global environment. So the underlying pressure has been deflation, lower and lower inflation all the time. And so in this period, which is now 45 years, we've had 16 bubbles so far. So when I see a thing like that, first of all, I need to understand why this is. And this is described in the book Business Cycles, or the inevitable business cycles, that what happens when you have low inflation or deflation is that central banks try to produce more money to get the inflation up to 2%. But because of the high innovation, you cannot get the inflation to work because you have automation, you had the industrial revolution, you have one technology after another that just makes competition very efficient and make prices continue to go down. So the money that the central bank tries to create or manage to create, a lot of it flows into financial markets. And we call this financial liquidity. So this is liquidity that doesn't circulate around in the markets for bread and washing machines or whatever. They circle around in the market for investment assets. So typically in this situation, you get deflation on consumer prices, but you get inflation in financial assets. So we have another term for inflation in financial assets is bull markets. You get these bull markets when you have low inflation or negative inflation and high innovation. So I can ask you, or you can ask me, but I can ask you, do you think we will have low inflation? Let's say we take the next 10 years or 20 years. Do you think we'll have low inflation? That's my first question.
I can have a guess. I think that depends on different countries. If you are talking about, for example, China, you can see from the statistics, we are actually have a deflation environment. But if you are looking at the US, I'm not so sure. I mean, you have pointed out a very interesting argument is that almost everybody believed that US should have inflation, but it turned out to be there is no inflation at all after the tariff. So, I mean, it's difficult to forecast what's going to be in the US.
So my take on this is that AI will automate a lot of things. So a lot of services, especially, that we now pay a lot for, like legal assistance and accounting and financial services and so on, will become free or close to free. So I think in terms of
deflation,
we have deflation in a lot of things because of AI. But we are getting closer now to a real mass market in physical AI, or embodied AI. Embodied intelligence is also sometimes called, but that's robots. And so China will be leading the world on cheap, efficient robots. But Elon Musk will also produce them, and they will be everywhere. So these robots, if you take a Unitree robot, they cost about $16,000 or something like that. The price will, knowing what China does, the price will go down and down. The quality will go up and up.
I think it's like more like a $5,000-6,000 US these days.
So they will
It's
end
like a
up
lot
eventually
cheaper.
they
Yeah.
will end up costing something like that, and then they can work 24 hours a day, and they will and of course you have to depreciate them, but maybe they can work 20 or 30,000 hours, and then they need the electricity, and the cost of the electricity is such that you can probably all included run them for somewhere between less than $1 per hour and $2 an hour. So I think that the robots will also be incredibly deflationary. So you have AI and robots incredibly deflationary. So my view on this is that we are facing a period where we'll have extremely low inflation and we'll have exceptionally high innovation. So we'll have a period that's similar to what I described before, these Goldilocks periods with lots of bubbles. But this one will be in a completely different order of magnitude because the innovation is absolutely rampant right now. So I think that the environment for financial investments will be exceptionally good in general over the next, 20 years or something like that. And I also think it will be exceptionally volatile. Volatile because there will be so much money going into financial investments that will create one bubble after another. That doesn't mean I don't think, for instance, many people are asking whether AI is a bubble right now. So AI companies, like for instance, OpenAI is thinking about going public at $1 trillion. That's not cheap, but the one thing that I think might be a bubble right now is gold. but not.
Sorry, do you think that gold is at bubble or not?
Yeah, I think gold looks to me like a bubble.
Okay.
But I don't think that AI is a bubble. I think that AI will evolve so quickly and create so many different applications that very high valuations are generally justified.
So, NVIDIA just hit $5 trillion US dollars market cap yesterday.
Yes.
This is a historical point.
Yes, because when you start comparing the value of a single share to the GDP of the country,
That's amazing. That's really amazing.
yeah.
And I think in your view, there is no AI bubble at all. And in terms of the business cycles, do you still think that we are in early stage, or you think we are like somewhere in the middle already?
Well, I can talk about the US and China separately, but perhaps also
Yes, absolutely.
Sure, yeah.
a few words about Europe. But if we take the US, I think we are at the early stage of upcycle. If we go a few years back, I think we have had what you call rolling recessions. So we had different sections of the economy that were in recession, but not enough to create a general recession. So part of it was being the office market. There's been some consumer spending in different areas like services and restaurants and different areas. So one area after another in the US economy was quite weak, but was still chugging along. What we've seen since the launch of GDP 3.5 is this beginning of this accelerating capital spending in and around AI, which also includes in energy. So in my opinion, energy is a part of the tech stack of AI, because energy is really critical. And on the latest quarters, about 40% of the growth in the US economy comes from equipment mainly in AI. And this is quite remarkable because the capital spending in equipment is something like 6 or 7% of the economy. So a very small part of the economy contributes 40% of overall growth, whereas consumer spending is 68% of the economy, and that contributes about the same or a little bit more. So it's really, really capital spending driven. And then we are also in the US at the early phases of interest rate cutting cycle. So when interest rates come down, mortgage rates come down, and I think that will lead to improvement of the property market, so residential property market. So the way I see it is in the US we have two big contributors to the business cycles, which is capital spending and property markets will now in the coming years stimulate the economy. So we are likely to have high growth. And we also likely to have contained or low inflation, in my opinion. So the US is in a very good space. You have to say though also that US equities are not cheap, so it has been to some degree discounted. But I think that it's heading towards high growth. And then if you come to China, the story is quite different because you can call the Chinese economy a managed depression. And what I mean by that is that...
Manage the depression.
Yeah, managed depression.
Okay, that's a new word.
Yeah, and I want to explain that very well, as good as well as I can. So first of all, I've been following the Chinese economy very, very closely, and I have, from time to time over the last 30 years, been heavily invested in China. So I was, fully aware of something that looked quite extreme in the Chinese economy, and that was the property, activity related to properties peaked at 28% of the Chinese GDP a few years ago. So 28% is very, very high, or was very, very high. So in the business cycle book, I described what the numbers normally are. So I would say for an OECD country, normally these numbers are like 12%, maybe 14%. They're not 28%. So China was so driven by property investments. And then suddenly this thing began to crash, and the numbers went all the way down to 12%, which is like low normal for a developed country, and then went up a little bit. So my way of thinking is, the first thing I think is, wow, it's just like 16% of the Chinese economy just disappeared. How do they manage that? And then I was really horrified. And then, so I have a daughter who she runs a fashion accessory company where they produce a lot in China. So she's been going since she was 18 years old when she founded it.
Really?
Yeah.
She's entrepreneur. She's 18 years old. That's amazing.
She's 33 now. They have 300 employees now. But she's been going to China like 4 times a year. So since she was 18, and she told me that you have to go to China. It's insane what is happening with infrastructure. So I say, okay, and she said, I can see it from year to year that I come, things look different. The trains, everything I see is just getting upgraded so quickly. So I went, and I could see that, this.
When was it?
That was a bit over a year ago. So I was
a year ago.
Yeah, CITIC Press has published what is it? I think it's 6 or 8 of my books in Chinese, and they invited me to come and do speeches. And I was so busy I couldn't come. But then she said, you simply have to go and see what's going on in China. So I came, and then I see everything, and I can see. Oh, now I understand this. The missing 16% in property. Yeah, they invested it in infrastructure, and the infrastructure is now in many places more sophisticated than the most advanced in Europe. So that's how China managed it, simply by saying, okay, we are missing 16% in our GDP plus we want to have growth. We just invest massively in innovation and infrastructure. And then so this is my managed depression. So obviously, eventually, the property market in China will have cleaned out the debris, if you will, from previous overinvestments in property. I had a long talk with Hao Hong, the economist, and he said he thought it would take another 5 years. I don't know. It depends to some degree on government initiatives. But it's possible for China it has been possible for China to simply redirect and do these infrastructure investments. And so I see people talking very positive about the Chinese economy, also people talking very negative about it in the West. So the people who talk negative about it, they say, they're making bridges to nowhere and just building infrastructure that nobody needs. But if I look at the numbers on innovation, it's quite clear to me that a lot of the investments are really, really efficient for the Chinese economy. So a really interesting place to look is military intelligence cooperation organization called Five Eyes. This is United States, Canada, Australia, New Zealand, and UK. They cooperate on intelligence matters, or speak the same language. There's a culture thing there. They hired an Australian research institute to make a map of where different regions in the world are on the most important technologies for the future. And this has been going on for some years now. So they mapped it back from the first period was 2001 to 2003, and then every few years they redo the study. So they did first retroactive, and now they're following it in real time. And now it's 62 different technologies that are mapping. And out of those 62, to be honest, I can't remember if it's 62 or 64, but it's around there. Critical technologies for the future. Out of those, now China leads in 57.
What? That's the majority of them.
Yes, it's like almost all of them. I mean, really. And if you go back to 2003, what do you think it was?
I don't know, 2?
3? You're close?
3?
Maybe none, maybe
Okay.
0.
Is that's not bridges to nowhere. This is money well spent, extremely well spent. So what the Chinese economy is doing is it's building up innovation at an incredible speed, and it's really very, very efficient. So I also read 5-year plans, and I think that there's a great agreement in the leadership and among Chinese economists about some structural issues that remain, though. And one of them is overcapacity in different sectors. And that means that if you look at the long-term performance of the US stock exchange compared to the Chinese stock exchange, you can see that you would earn a lot more by being invested in American equities than in Chinese equities. And the reason for that, is you can be surprised by that, because China has had much higher growth. So why have you not made more money in the Chinese equities? But I once, this is quite some years ago, I read this analysis that really surprised me. It was, somebody had looked at where would you have made most money in the long term over, I think, like 20 years by being invested in Southeast Asia, which includes China and South Korea and so on, or be in Latin America. So Latin American economy is okay, but it's not great. We can agree on that. Southeast Asia economies are tigers. I mean, they are going like this. Nevertheless, you would have made more money investing in Latin America than in China or in Southeast Asia. The reason being is that there is something some people call the Asian growth model, which is very, very high investments, very high savings rate and very high investments in capacity. So there's always overcapacity. And this is also a problem that is being discussed in China right now, that there's a tendency to have overcapacity in different sectors. And that means that the competition is so hard that they don't really make much money or any money at all. And if we compare the American economy and the Chinese economy for a while, and think about which structural issues do they have that we can compare, you can say it's really, really interesting that they have the opposite problem. And if China would become more like the US and the US would become more like China, they would both be better off. Let me explain that. So in the US, consumer spending is almost 70% of the economy. I think it's 68% right now. And in China, it's closer to 40%. It's really, really low. So China invest in production capacity. China has what the Americans would call a supply side economy. This is what, for instance, during the Ronald Reagan era, he wanted to make supply side economy in the US. There was a period where economists were either supply siders or not supply siders. So America wants to make more of a supply side economy right now. And for them, the fact that 40% of growth now comes from investments in equipment, in AI, is fantastic. This is supply side. They don't want the growth to come from consumer spending. They want the growth to come from investments. The Chinese GDP is growing rapidly, but the profit is not growing rapidly because there's oversupply. So if China had a little bit more balance, so there was more consumer spending, then the profits of the companies would go up. So I know that when Besant and his team have been talking with China, one of the messages that they have been bringing is that maybe we can help each other. Maybe if we produce more and you consume more, your economy will be more profitable and our growth rate will be more sustainable. So it's a very interesting situation that actually has a solution which both parties are trying to get to that solution. Because if you look at the policies in China, yes, it talks about continuing to prioritize innovation, which I think makes complete sense. But it also talks about more consumer spending, which is a part of addressing that problem.
Our leaders, U.S. and China leaders, are meeting today in Korea, in South Korea. So everyone's like trying to follow. But the stock market today was not looking great today after their conversation. Aaron was just telling me that before our show.
That's because I think it had discounted a deal and there were no positive surprises in the deal.
Yes, for sure.
Yeah, there's a lot of news and there's a lot of signals shows that U.S. and China, they are decoupling more, but not trying to work together. There's wing tax situation from Netherlands, and there's a bunch of like new companies being on U.S. entity list. So, but you were saying that actually the two countries want to work together.
Yeah, so what I think they want to do is both of the countries want to have strategic independence from the other. For instance, the US wants to be independent on China concerning rare earth metals. China wants to develop super high-end chips, so it doesn't need to import any chips at all, etc., etc. But that's not the same as not wanting to cooperate. I think there's always in trade incredibly great possibilities of mutual benefits, so win-win. But both countries are working full speed on just having strategic security. And I think what happened during COVID was an eye-opener for many. I had, at the beginning of COVID, I had ordered a car from Germany, and it took them 9 months to deliver the car. And they apologized very much and gave me a super fancy number plate for the car. But they said it was because we were waiting for some chips from Asia that we couldn't get because of COVID lockdown. I think something that American administration mentioned, especially Besant mentioned very often, is that we discovered during COVID that we are more dependent on other countries that we were aware of, and we have to be more careful with that. So I don't think, for instance, the fact that now the rare earth, the free trade of rare earth has been prolonged 1 year, doesn't mean that everybody relaxes. The US and EU and Australia and so on will be all in on building up rare earth capacity, and China is all in on building technologies that makes it completely independent on the West. And once you are independent, you can still trade. But you can trade, you can have your shoulders down, you're relaxed, you're just trading for mutual benefit.
It's an arm race for now, but trading, collaboration in the future, it's just like globalization 2.0.
Yeah, I think it's just with a reset where you're de-risking your trade, on both sides, yeah.
So maybe I want to go straight to the question about AI. Yeah, since you just mentioned about the whole thing about decoupling, and in your view, there are still some place for us to cooperate with each other. But do you think there is a very clear trend of decoupling within the areas of AI, just specific to AI, between US and China?
I don't see that as a very strong trend. For instance, China is very strong on open source and open weight AI models. And one of the biggest users of the Chinese models are actually American companies, also the major American companies. So I don't see it as a set of technologies where you have two completely different standards, like the VHS and Betamax, for instance. But there is obviously an interest in tying as many clients as you can on your tech stack, which, you have, I said, energy first, but then you have, of course, the chips, and then you have the different layers of software. And America is doing a lot of work. They have a term called safe compute zones. So a safe compute zone is a country that they trust, where they are willing to deploy their chips and their software. And for instance, in the spring of this year, we had Trump going to the Gulf states, to Saudi, Qatar, and Emirates, and signing deals. So they set up data centers, data factories, where they have a lot of critical American technology. There were some weapons deals also and security cooperation tossed in. So both sides, China and the US, will want to use different strategies to get people to get close to or build on the different tech stacks. I just don't see it as something that completely bifurcates into two things that are not compatible at all. And as I said, lots of American companies are using Chinese technology today because they haven't found anything risky about it, and it's free and it is efficient.
What about Europe? I think, isn't there a national security reason? Like, I know some European country, they only want to use Mistral for their application to build on top of. They're probably not going to consider any U.S. or Chinese model to work with.
Yeah, so I think it's only a fragment of the Europeans that are suspicious of American technology. I think that 70%, 80% of Europeans do trust American technologies. But it's interesting to look at a comparison. Where are US and China and Europe in terms of rolling out AI? So if you take patents, China is the clear leader in the world. About 70% of all patents issued on AI are issued in China. I think it's around 15% in the US, 5% in Europe, something like that. 5% for the rest of the world. But if you then look at compute, actually, how much are chips burning through, running AI, the US is a big leader. 75% of all compute and AI is this massive factories in the US. China is 15%, Europe is 5%, something like that. And if you look at the leading large language models, if you take the ones that are really regarded as leading models, 40 of them are in the US, 15 are in China, and 3 are in France or in Europe. So Europe does not shine in these comparisons at all. But I think it's very important to, when you think about China, to think about China has this AI plus strategy, which is about introducing a layer of intelligence throughout society in general. And I think that's very, very important and very rational. So a lot of this is not large language models, but small language models and agentic AI. And one advantage that China has, which is, there are two strategic advantages actually that China have for this. First of all, China has very efficient electricity, a very cheap electricity, and lots of it, very efficient grid. China last year invested more in smart grid than the rest of the world combined. Second is people. So we talk about AI to automate and get rid of people, but the fact is that when you want to roll out AI in millions of companies and business processes, you need people to analyze it. I know this because my own company, Supertrends, does that. I can tell you there's a lot of human thinking going into how to make agentic AI work for a specific business situation, lots and lots. And China educates about half of all STEM, science, technology, engineering, and math candidates in the world. China is very, very strong on AI education. China, I think, has 9.6 million engineers. The US has less than 2 million. So China just has the manpower with the relevant education. So Europe's chance is to go the Chinese way, I think. Apart from Mistral, Europe doesn't really have anything on these phenomenal high-end large language models. But you can still roll out agentic AI. And for instance, Hugging Face, which is the main depository in the world on
open source model.
Yeah, is French. Comes out of France.
Yeah, I met him once in San Francisco, one of the event. Yeah, and also Lovable. They've been doing really well.
Perhaps that doesn't really matter, but it just means that Europe is behind on some major things. Also, the electricity tends to be expensive in Europe. But Europe can do the same as China, and I think that's the way it will go.
you are an investor, as we do, right? Now you have to allocate your capital between US and China in AI areas. Are there any specific areas that you would allocate your capital in each country?
I find it difficult to answer that for China, I would say, because I'm not deep enough into the alpha, the stock picking in China. So what I can tell you about is how I'm invested in general, because we have a fund. So so we are quite invested in China, and it's about 25% right now. And the reasons are, first of all, that Chinese investors have no alternative to stock markets, in my opinion. Right. Yeah. So if you invest in a bank account, maybe you get 1.2% interest rate. If you invest in government bonds, you get 1.7, 1.8%. Then if you invest in the stock markets, you have earnings yields. So if you look at forward earning yields, so based on expected earning next year, in some of the indices, you get like 10%. If you look at trailing earnings yields, maybe you're down to 6% or so. First of all, if you look at historically, it's been extremely unusual in any market to have higher dividend yield than bond yield. So on average, if you just invest when you see that, you'll make a lot of money. Second, the difference between the earnings yield and the bond yield is incredibly high in China. Then the next thing is that you have the savings accounts in China recently exceeded 2 times the value of the stock market, the market cap of the stock market. So last time we saw this was in 2014. So we have these enormous savings and quite low stock market. What happened the next 12 months was the savings went down and stock market went up.
Stock market goes up.
Yeah, the money just goes into the stock market. Now we are in the same situation, in my opinion, so there's no guarantee that this will happen. But it's definitely a possibility that this money goes in and say, hey, why do we pick up 1.1, 1.2% interest rate when there's 10% earnings yield waiting for us up here? Let's move the money into the stock market. So these are tactical reasons. But I also think that we already spoke about the level of innovation in China, which is so impressive. If we look at the Global Innovation Index, which ranks different countries in the world for how innovative they are per capita, China has just surpassed Germany. I think China is number 10 in the world. And so there's a very high statistical correlation between how high you are on Global Innovation Index and what is the GDP per capita. So I'm sitting here in Switzerland. Switzerland is number 1 on Global Innovation Index. It's also the richest country in the world, at least that doesn't have gas reserves like Qatar. So very, very high correlation. Then if we look at all the countries, how they correlate, the biggest outlier that is not placed on this correlation is China. Biggest outlier in the world. So China, if we put China where it should be in terms of GDP per capita, it should be like Germany or higher. It should be 3 or 4 times as high as it is. I know there's something difference between nominal GDP and real GDP, but the innovation in China has come so quickly that it has not spilled into GDP fully. So there's a lot of GDP growth catch up because of the innovation in China. So I like China very much from that. But then another thing that I like very much is commodities. So previous we spoke about where China and US are in the business cycles. I think we are in the beginning of a commodity cycle because since 2014 there has been way too little investments in new mining capacity in the world. And that means that that we are now not prepared for the demand for especially industrial metals that will come. And we're beginning to see the first signs of a commodity cycle. We've seen silver explode up. This is an industrial metal. We've seen platinum. We've seen uranium. We've seen rare earth. We see copper kind of silently. People are not really talking much about it. Copper is just silently climbing up. And I would feel much more safe if I invested in copper than in gold in this market.
Okay.
Because
Okay, so I suppose in our discussion today, in terms of the commodity you mentioned, does that include gold, silver?
it does not.
No?
I don't, gold is a different thing, but it includes. It's most commodities are heading towards.
I think you mentioned about metals, right?
Yeah,
It's
yes,
not
metals. It's only metals. It's only metals. I'm
Yeah,
not
it's only
talking-
metal. It's not. There's no oil. There's no crude oil. There's no gold. It's just metals.
Yeah, it's industrial metals, which by the way, uranium is a metal, so it includes uranium. So last time we had such a cycle it began around 2000 and lasted until 2006 to 2008. And there we saw mining companies on average go up 400 to 500%. You saw metals prices go up a lot also. And I was completely invested in that. And I remember what made me invest. The first thing that made me invest was Jim O'Neill from Goldman Sachs writing about that situation. He wrote about bricks that would need a lot of metal, and then he wrote about the lack of investment in mining, and he said there's going to be a shortage of metals because it takes a long time to build up capacity in mining. It takes on average 15 years to start a new copper mine, for instance. So over the last 10 years, since I said in 2014, the mining investments became insufficient. Over the 10 years following that, the global metals production has gone down. It's completely unsustainable in my opinion. I think there will be a big catch-up process. But when I did this in 2000 and 2001 and invested in metals and mining, I noticed that whereas Jim O'Neill, he was looking at the whole situation and said there's a big problem, which is a big investment possibility. Then when I looked at the predictions from different specialized mining analysts, many of them didn't see what he saw. They were looking, they didn't see the whole picture. They were looking at what's going on in aluminium, what's going on in copper, and so on. And I think we have the same here, that many of the specialist analysts, they're not as bullish as I am, for instance. So the people who look at the global macro, the whole scenario, they say, okay, the world is going to become more wealthy faster because of AI and robots. And electrification requires a lot of electricity, but electrification requires a lot of metals. Electric cars maybe use 7 times as much metals as traditional cars and so on. There's not going to be enough. So obviously the mining companies, they can ramp it up, catch up with the demand, but that takes 10, 15 years. So that's a very big thing I'm bullish on. Then I like biotech companies. So typically biotech companies, if they make something really hot, they get acquired by big pharma, for instance. I think that's a very interesting sector. I like Vietnam. Vietnam is a frontier market, what will probably be reclassified as an emerging market, and that could give maybe 20% on, or 50, or I don't know, a boost in their share price, because a lot of funds have to invest in them. And they're also very innovative, not like China, but their innovation level is too high for their GDP, so to speak. Their GDP has to catch up. I like some other ASEAN countries. We are in Greek banks, but I've been there for 3 years, so it's a little bit late stage.
Thanks for sharing your personal portfolio.
Yeah, it makes more sense to me from your book, Hyperintelligence, from like a really big angle, how the universe started. It's like, why you study all this? It's like, you're like, predict this going to happen, like one technology, and then you deduct it from there. And then, for example, like, the electric car going to happen to everyone. And then, mineral probably need to buy in for now. So it does look like at least 15, 20 years of like kind of time frame.
Yeah, it's one thing follows another. But you remember when we talked about the book Business Cycles, why I wanted to understand it from the beginning, going back through to the very first economist. So it's the same we did with AI. So we're 3 authors, but we wanted to understand the roots of AI. In the end, we went 13.8 billion years back and say, how does complexity evolve? So that was to some degree for fun. But I think when you then study how complexity and intelligence evolved in living beings, animals and especially, and the human brains and so on, you can see it's the same. It's the same that we're now doing it with technology. We're just doing it millions of times faster. And but we can learn something from what we have learned from studying biology and civilizations. For instance, the fact that a civilization is much more clever than any node in the civilization. Humanity is much more clever than a human. And the same, of course, will happen with AI, is that the sum of all AI will be massively more capable than any single AI model. And right now, people, when they try to find out what is the pinnacle of achievement, they are comparing Grok to GPT, to DeepSeek, to Gemini, and so on. But eventually, this is like saying, what is the peak of human performance? And then we compare Einstein to Newton to I don't know who. But instead, we should say that the pinnacle of human performance is what we do collectively. And that's completely different. So we have to look at it as civilizations. And I think eventually we have to think about AI as a kind of artificial civilization. And we go into that in the book and try to make some thought experiments about sending AI to Mars, and that it can start its own civilization there and so on.
So what portion of your investment portfolio now is AI related?
We have some AI exposure, but we don't invest much directly into AI companies because we think they are not cheap.
Okay,
but
like NVIDIA.
Yeah, but I think the exposure to China and to commodities is an indirect exposure to AI, because we think that the world economy it has a structural growth rate, like a speed limit is what economists call it, and we think that this growth rate will get steeper because of this. And I have some graph that shows the growth rate of the speed limit of the American economy since 1770. And it's been the same all the time. And I think that because AI and robots are so radical that the speed limit will go up. So it will be possible to have growth of 5, 6, 7% without getting inflation for a period. Okay. I think 6 and 7% sounds like high, but somewhere between 5 and 7% should be obtainable if you run the right policies. That's a big if, but the world economy will accelerate, and when people get more wealthy, they want more stuff, and more stuff includes more commodities, industrial metals, and so on. And for instance, in America, there's a close to panic about lack of electric power.
Yep.
Yeah, if you just look at the plans for build of data factories in the next 5 years, this will require like 100 nuclear reactors more.
I know. I live in California half of the time. The infrastructure, PG&E, is horrible. Once there's like wind or like some fire break out, it's just like I have weeks without power. And then and then also Trump cut off a lot of like new energy plans. Like they don't have like new energy stuff like heavy investing like China.
Yeah, so for instance, tripling of the nuclear power within the next 15 years, which I think is, I don't know if they will really make that, but they're trying to achieve that. And I think, so they're all in on nuclear power of all sorts. And China is building 30 nuclear power reactors right now, discussing 150. Experimenting with thorium reactors in the Gobi Desert. has both US and China and other places have nuclear fusion reactors. That would be nice if that works. You have the small reactors, small scalable, potentially mass-produced reactors and so on. So even the EU, which has been very anti-technology, has now accepted nuclear power as a clean tech. So instead of shutting down nuclear, they actually might begin to building it up.
So
I'm so happy when I live in Switzerland. We have nuclear power and water, so we are fine. But
Lars is very positive about the upcoming years. That's what I get from you.
That's actually one of the most optimistic
Positive conversation
for
we
the
have.
U.S. economy.
right, yeah.
Final question. What advice would you give to investors and entrepreneurs navigating today's uncertainty? Just one final advice if you want to give to them.
Be bullish is a two-word advice. Believe that the world economy will do amazingly well the next 10 or 20 years. To entrepreneurs, I would say if you were living just after the invention of the steam engine, wouldn't you invest in that? Now you're living in the age of something that's much easier to deploy, which is agentic AI or AI in general. If you are not doing that, then you have a reason. You need to have a good reason, because AI is the biggest entrepreneurial opportunity that you will ever see in your life, and it's arguably the biggest in the history of mankind.
Okay, I just want to go back a little bit to the beginning when you mentioned that before the 2008 financial crisis, you suddenly, all of a sudden, you have a sort of instinct that things might go bad, and then you short the market. Do you sort of have that kind of instinct right now?
Yeah, my instinct is that things will go very well.
Okay, considering all the market, the valuation and all the market hype right now, you still don't have that instinct right now.
I don't have any instinct that the things will go bad. I have the instinct that it will go better than most people think.
Okay, thank you. Really appreciate that. Please let us know when you have that sort of instinct.
I'll give you a call.
Yeah, I really appreciate
My thought
that.
exactly too. All right, thank you very much, Lars.
Yeah, thank you.
Thank you, Lars.
Thank you.
今天的科技早知道就到这里了。听完之后，如果你有任何的想法，欢迎在评论区和我们交流。
如果有任何想听的话题，也请告诉我们。如果你喜欢我们的节目，请记得分享给更多的朋友。
那我们下期再见。
下期再见。